Hello everyone. In this video, I like to discuss 4 important reasons what I think makes the ICICI Bank to outperform HDFC Bank at present. Before the reasons, just some fact or fundamentals for both of these banking stocks. At present, ICICI Bank as of 12th August 2022, it is trading at 876.85 rupees per share with market cap just over 6 lakh crore rupees. Whereas HDFC Bank it is trading at 1485.15 rupees per share with market cap just over 8.2 lakh crore rupees. ICICI Bank is at 52-week high price, whereas HDFC Bank is at 86% of 52-week high price. ICICI Bank year to date gives the return of 14.87%, whereas HDFC Bank gave the return of negative 2.35% in terms of year to date. Coincidentally, at present, both of the shares are trading at the same PE ratio of 20.75. Just for info, in international terms, PE ratio of above 20 for the banks is very expensive valuation. Enough of facts, now let's get into the reasons. First reason, rollout of fintech in ICICI Bank. If we look at ICICI Bank's loan portfolio, mortgages, SME and business banking segments are standing out at present. The bank's fintech called InstaBiz is the cross-selling initiatives and its digital loan offering business. InstaBiz aided the growth in SME and business banking loans. In fact, the InstaBiz application saw an over 55% year-on-year rise in the value of transaction processed through it in Q1 FY 2023. In this space, HDFC Bank has to do some serious catching up. We cannot able to compare apples to apples since both of the banks releasing the loan portfolio under different category. But one standout or worrying factor for HDFC Bank is the share of corporate segment. In June 2020, it was 28%. At present, in June 2022, it is 26%. In their statement, HDFC Bank mentioned that they lost Rs 40,000 to 50,000 crore of corporate business in Q1 FY 2023 by deciding not to lend at lower interest rate. Again, this decision is affecting the HDFC Bank growth rate. In order to catch the ICICI Bank in fintech, HDFC Bank under the new CEO Sasi Jagdishan, in Q2 FY 2023, they are going to launch PayZapp 2.0, an advanced version of its payment app, which will enable the bank to tap the retail customer base. They already launched the Express Car Loans app in April 2022 to improve the digital experience for customers seeking auto finance. Jagdishan hopes and promises HDFC Bank to transform it into a new bank or virtual bank backed by such new digital products. Now, second reason, ICICI Bank consistently increased their net interest margin in the last 8 quarters. For those who don't know, net interest margin NIM is the measure of the difference between the interest income generated by the banks. It means the amount of interest generated by loans after paying out the interest to their lenders. For example, deposits. It is similar to the gross profit margin for the non-financial companies. In Q2 FY 2021, HDFC Bank net interest income is 4.1%. At present in Q1 FY 2023, it is 4.2%. In terms of ICICI Bank as shown in the graph, in Q2 FY 2021, it was 3.57%. Now it consistently increased to 4.01%. Both of the banks' NIM is way higher than any public sector banks. They are in the range of 2 to 3% only. So in terms of NIM, still HDFC Bank is higher, but ICICI Bank is catching up very fast. The third important reason is quarterly profit CAGR. HDFC Bank is very consistent. Between FY 16 to FY 21, HDFC Bank profit grows at 21%. In the last 2 years, it drops to 19%. Whereas in case of ICICI Bank, between FY 16 to FY 2020, it got the negative CAGR, which makes the bank to trade way lower than the HDFC Bank at that time. But after pandemic from FY 2020 to FY 2022, ICICI Bank net profit grows at whooping 72% CAGR, which is really huge growth rate. As we always know, the market always rewards the fast growing company. The same is happening now. Now, the final and fourth reason, Reduction in NPA, non-performing assets. HDFC Bank asset quality was and is always good. In Q1 FY 2022, the net NPA of HDFC Bank was 0.5% and now it is reduced to 0.4% in Q1 FY 2023. In case of ICICI Bank, it was 1.2% in Q1 FY 2022 and now it is reduced to 0.7% in Q1 FY 2023. Though the asset quality of ICICI Bank is not better than HDFC Bank, but the pace they improved the asset quality made the ICICI Bank very attractive. So, as a summary, advancement of fintech, improved asset quality, pace of the net profit growth, pace of the improved net interest margin are the reasons for the better ICICI Bank stock price movement compared to HDFC Bank. As I already said, market always rewards the fast growing or fast quality improving stock. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help the YouTube algorithm and it will also motivate me to do more. Please don't make any investment decision based on this as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.